Holy smokes everyone, in today's video I'm going to break down exactly what the banks are doing with gold and silver right now and go over exactly why it's been underperforming and also what could happen with the gold and silver markets in 2022. I'm making this video after popular demand. I asked you guys what you wanted to see and you said you want to know exactly what's happening with gold, silver, what the banks are doing with it, how it's being manipulated, and how we can use it to prepare for the coming financial crisis and recession. So everyone, this is going to be a good one. I've got huge amounts of data, huge amounts of facts to show you, give you a look behind the curtain, what the banks are doing to manipulate the markets. I'm going to reveal all these so-called conspiracy theories about what the banks do to the precious metals market and find out once and for all if it is a conspiracy or if it's a conspiracy fact. So everyone, we got so much to get into. Let's not waste any time. Let's get straight into it. Okay, so first things first is this everyone. Gold holds biggest decline in 6 weeks after bond yield surge. So I don't know if you saw yesterday, but there was a pretty big sell-off in the gold and silver markets with gold down around 1.5% and silver down around 1.8%. So what caused this sell-off everyone? Well, like I've been talking about and like I've been warning about, what's going to happen when the Federal Reserve tapers its asset purchases and also when they start hiking interest rates is the yields on the US treasuries are going to go up, the dollar is going to go up, and this hurts most commodities. We saw yesterday the 10-year treasuries had the worst start to a year in more than a decade, with yields rising 12 basis points on Monday, the largest first day jump since 2009. And I'll bring up a chart here everyone. We can see how the yields on the 10-year US Treasury, aka interest rates, are starting to climb pretty rapidly. Also, since the Federal Reserve announced it's going to taper its asset purchases and lift interest rates much sooner, we can see the US dollar has been rallying in the US dollar index. But that doesn't mean you're still not losing purchasing power, everyone. So that is the first reason why it's been performing lately, from rising yields on bonds and also from the dollar going up. Like I said, this has a weakening effect on most commodities. And really what should have been happening is we should have had a sell-off in stocks as well. But what I think has happened and what's changed with investors' mindset is gold, silver, cryptocurrencies, Bitcoin, we're seeing a weakness in all these other markets besides the stock market. Why is this everyone? Well, the reason I think why is because, for example, if gold falls 50%, if Bitcoin falls 50%, the Federal Reserve doesn't care what happens to gold, what happens to Bitcoin. So the Federal Reserve isn't going to bail out the precious metals market and the cryptocurrency markets. So this is a more of a free market, and this is a market that's following more fundamentals than the stock market, because something happened in 2020 that has never happened in history before. When stocks were plummeting 13% every day and we saw the fastest decline and fastest bear market in history, the Federal Reserve did something unprecedented, and it did something it is not normally allowed to do with the Federal Reserve Act. And what that was is it pretty much bailed out the stock market directly. It got as close to buying individual stocks as you could get. How did they do this, everyone? Well, they started buying corporate bonds. That means all these mega corporations, they could just create an IOU, a corporate bond, and before the Federal Reserve had this facility, no investors wanted to buy these because they thought a lot of these companies were going to go down. But then the Federal Reserve came out and says, don't worry, you just issue debt and we'll buy it up and we'll buy these corporate bonds at whatever price. And so since they have done this, and I think what's changing in investor sentiment is they're thinking that the stock market is now invincible. They're thinking it can never go down, or they think if it does fall 10, 15, 20%, the Federal Reserve is going to be there to save the day because the US economy relies so much on the financial market right now because it's no longer producing much goods and services. So that's the reason why I think gold and silver and Bitcoin is falling, but stocks are soaring. Now, going back to what the banks are doing to the precious metals market. Many people have commented below and have told me that the banks are manipulating the market, and so I investigated to see exactly how they're doing this. And this is what I found, everyone. JP Morgan settles lawsuit that accused the firm of spoofing precious metal market trades. The suit by hedge fund manager Daniel Shack and 2 commodity traders accused JP Morgan of manipulating the silver futures market, costing plaintiffs $30 million in losses. The bank is also nearing a settlement, which has already happened now, of $920 million to resolve government investigations for similar alleged conduct in precious metals and treasury future markets. You see there, people, it's no longer a mystery and it's no longer a conspiracy theory. The banks are doing this and they're making billions, but then all they do is get slapped with a speeding fine of a few million. But we need more evidence than this, everyone. Well, also this happened, everyone. Investment bank traders bragged about how easy it was to manipulate the precious metal markets. Now, to put it very simply, they use the paper precious metals markets and they use future contracts to manipulate the price. For example, they can put in an order to buy a certain amount of gold and silver. Then they can use high frequency trading to flood the system with sell orders to plummet the price. And I did a bit more digging to see exactly how much exposure of derivatives the banks are using to manipulate the prices. And this is what was just released in a quarterly derivatives report on the major banks in the US. Look at this chart, everyone. This is nominal amounts of interest rates and Forex gold contracts by maturity. Now we would look at the bottom chart here, everyone. Since 2001, if we look at the 1-year contracts, the orange blocks, we can see the banks have been increasing and increasing their derivatives in the foreign exchange and also the gold markets. And again, it's with these derivatives, these future contracts and the paper markets, this is how they're manipulating the price to keep it suppressed. Now, like any other commodity and any other asset class, there is also just simple economics of supply and demand. So I investigated to see what is happening to the supply of gold right now. And I bring up the chart here, we can see the gold mine productions have just actually hit a record high in 2021. The gold miners' production has increased to 1,782 tons. Now bring up another chart here. The gold recycle market is down a bit, but it is not enough to offset the increase in gold miners' production. So again, rising US treasuries and rising dollar is hurting its price. Also increased production. Like I showed you, the banks are manipulating the markets with future contracts. Now also another reason why the precious metal markets haven't been performing as well since 2010, and something I think a lot of precious metal investors are looking over, is cryptocurrency. Because before 2008, if you thought the dollar was going to die, you didn't want to invest in the stock market, you didn't want to take debt and invest in the housing market, you thought that the whole financial system was going to go down, wanting to get out of the banking system, really there was only one option. But what's happened now with the rise of Bitcoin, a lot of people that invest in gold are also now starting to diversify into Bitcoin as well. Whether you like it or not, that is a fact that is happening. And with the cryptocurrency market cap hitting $2 trillion, for example, if that $2 trillion was pumped into gold and silver markets, they would be up at least 30 or 40%. Now, not saying gold or Bitcoin is better, it's really up to you and your own personal situation. And really for me, why not have both, diversify into both? Bitcoin still is very risky, so I'm not saying put all your money in Bitcoin or have a large part of your portfolio in Bitcoin. Diversifying a little bit of your portfolio into Bitcoin, it can help you diversify and increase your overall portfolio performance. But what you're probably wanting to know is, how will it perform later in 2022? Well, there is also something else happening with the banks that is quite bullish for gold. This, everyone, Basel III, a gift for physical gold investors. And what Basel III simply is an agreement that came into effect on the 28th of June for European banks, but also it just came into effect on the 1st of January for British banks. And what this Basel III agreement simply does is it makes gold, physical gold that is, a tier 1 asset and a zero risk asset, and it also classes it the same class as currencies. So even banks know that physical gold is real money and that fiat currency is trash. Like I also told you in a previous video, that central banks are hoarding gold at record levels. But going back to the outlook for 2021, when we look back at history, gold normally doesn't perform well when the dollar is rising and when interest rates go up. But like the banks are doing and central banks are doing, this is a good time to accumulate gold. Because like in any markets, what is the best thing to do? Buy low, sell high. But for some reason, us humans, we never do it, because we like pleasure and we hate pain. So like in 2020, when things hit the fan and gold surged 35% and silver surged 70%, it was too late. But those who were accumulating in the bear market profited greatly. So what this simply means is, in the short term, gold and silver probably isn't going to perform that well with interest rate hikes coming. Like I've been warning about, and like many other economists are now starting to realize, like Elon Musk warning, even Cathie Wood is now warning that we are going to have a recession in late 2022 when the Federal Reserve hikes rates. So once that reversal does come, once there's a lot more fear in the markets, like what happened in 2020, that's when gold and silver really does shine. So everyone, that was an update on the precious metals market, How do you think it will perform in 2022? Let me know. Now for all my loyal viewers and subscribers still watching, you're awesome. I'll put up some of my other videos here. I'll see you there.